And the other stock on our radar right now is Bikaji Foods. Manoj Verma, who's the Chief Operating Officer at the company, joins in now. We're tracking the consumption space. We looked at it through the sale of two-wheelers and the suppliers to that. And now we're looking at it through, the sale of ethnic snacks too. The third quarter was marked by extremely high inflation in some of their key raw materials, including the likes of palm oil as well. Has that impacted performance in the fourth quarter? What's the outlook? Thanks a lot, Manoj, for joining in. That's really the first question. The fourth quarter, how has it been so far? Have you seen any moderation in input prices? I remember you said that you've taken price hikes of around 2.5% to 3% in the previous quarter, with a prognosis of about 1 to 1.5% in this quarter as well. All said and done, what does that mean for your margins in the fourth quarter?
So absolutely right. As we said that in quarter three, end of quarter three is what we took the price increase, and the benefit of that would reflect in quarter four. So certainly you will see drastic movement, upward movement in quarter three to quarter four in terms of the bottom line number, and that is on the basis of the price increase what we took.
So you typically target about 11.5 to 12% ex PLI margins. Will you do that in the fourth quarter? Because the third quarter was just about 8%.
So yeah, so this was including PLI. So including PLI, yes, it will be ahead of that. But what we are seeing is that by end of quarter one is what we would normalize. So we'll come back to last year's quarter two level. So these two quarters, quarter four and quarter one, will get us to that level. So part of the increase, price increase, we have already taken in quarter three, and now a little bit we'll take in quarter one as well. So that's what is the plan.
What about volumes? The last quarter volumes were impacted by obviously a higher base. You had done, done away with some of the promotions, etc. The package sizes reduced, so the net volumes grew by about 3%. And you had a target of 13 to 15% volume growth for the entire year. Where do you stand on that number? And what kind of volume growth are you expecting in the fourth quarter?
What we said was about 12-13% of volume increase and the balance to the price increase. This is what was the plan. Now, this quarter, you will see, yes, the volume growth would be moving up. I mean, vis-a-vis if we look at the last quarter. So, yes, there will be improvement in this.
By how much?
So, 3 to 4% ahead of what we did last quarter.
Okay, so about 5 to 6% is what we can expect in the fourth quarter. What does that set you up in terms of targets for the next year, FY26? What kind of volume growth, price growth, and margin expansion are you expecting, if at all you are?
Yeah, so certainly yes. So for next year, what we are looking at double-digit volume growth, so somewhere around 11-12% kind of a volume growth, and we expect say 3% kind of a value increase. So that's what should take us around plus minus 15% in terms of value for next year.
And what about margins?
Margins, we will, so by end of quarter one next year, we will come to the normalized margin. So it's of PLI around 13.5% margin. And year on year, the plans are to increase say 50 basis point year on year for next couple of more years.
When we speak to you, we speak through you about the industry as well. There's buzz of that deal taking place in the world of Haldiram's, right? I just wanted your thoughts on what do you make of the valuations, the reported numbers, valuing that company at around $10 billion. What kind of juice is there in a business like that? How much bigger are they compared to you all? And, what is the valuation differential? Because if that deal were to happen, that would change the scope of things for the entire ethnic snack space in the country. What have you heard on it? And what do you make of the numbers that are reported so far?
So we would also know as much as you guys have read and heard about it. Certainly, Haldiram, if you speak about, is multiple times bigger than what we are. But one thing I can say for sure that this stationery category and industry is certainly gaining eyes, and because the kind of growth what this category has witnessed, and because there's still a huge unorganized sector which leaves us with a room of growth in say next 3 to 4 years more. So that perhaps is the reason that the investors are getting attracted on this stuff.
How much bigger, according to you, would Haldiram be versus you? Your, trailing 12-month sales are close to around 2,500 crores. Would they be 3-4 times your size?
Putting both Haldiram as a brand together, certainly they should be around 4 times of what we are.
4 times of what you are. And 4 times of what you are basis what is reported so far, they would be, looking at closer to 8 times sales. Would you think at that level there would be, upside to this space itself?
Hopefully, yes. Let's see how. See, there are two different things. One is that how the valuations are, and second, how the business. So I think within company, what we concentrate more is on driving, the top line, bottom line, the rest of the things and stuff. And valuation is purely external matter, which perhaps is.
How are they any different from all the others in the space apart from the size? I mean, do they have better efficiencies when it comes to margins? Do they have better growth rates? If you could give us a sense of the difference between them and the others so as to one can make a comparison on your valuations versus theirs as well, along with all the others that are listed.
So two things certainly I can speak on. One, of course, with the size of the company. So the economy of scale comes in. So in terms of margin, definitely, in terms of procurement, other efficiencies would settle more in a larger organization. That's one. Second is the larger portfolio vis-a-vis most of the other competitors. So these two strong certainly things are. Besides, I assume that quality, though each of the company would be concentrating or focusing on.
All right. Just a final question. With the money that they get, if at all they do you think, competition will increase for you and would make growth difficult for you, or will it continue to remain the way it is?
I don't see that way because this is not for the investment. I mean, this is purely the secondary stuff kind of a thing. So I don't think that would impact anything on the way the business is going in.
Wonderful, Manoj. Thank you so much. Always a pleasure speaking with you. Good luck for all of next year. 15% revenue growth, including 11 to 12% sort of volume growth, along with normalized margins by the second quarter is what you are guiding. 3 to 4% higher than previous quarter volumes for the fourth quarter, along with slump improvement versus what we saw in the third quarter when it comes to margins as well. That's Bikaji Foods stock marginally in the green, though it's still about 30% off its earlier highs.